Joining us for a closer look at what's playing itself out in that market scene is Nick Kunze from Sanlam Private Wealth. Nick, an absolute pleasure. Good afternoon.
Good afternoon.
All right, Nick, quite a lot, I think, happening around the world here at home. We've got mega cap earnings kicking off in the US. I'm just keen to get your thoughts here. What are we anticipating? I think Alphabet kicks off today.
Yeah, so plenty to digest, as you said, notwithstanding the geopolitics in the background. But let's concentrate on the stuff we we do know, and that's the numbers that are coming out and the earnings that we are slap bang in the middle of US earnings season, as you said. A couple of big caps coming out. We've got Tesla as well. We got Google, also the Alphabet Google parent as well reporting. So plenty coming out, and normally these do set the tone. So I think early impressions are the market seems to be getting a little bit of a bid. The financials came out last week. They were kind of in line, nothing to really sort of shoot the lights out, but so far they look like a beat. As I said, we'll see now with big tech this week. Will certainly set the tone for the next few days.
Another interesting one, I think, towards the end of last week, and maybe, making reference to the geopolitics and the politics of the day, we saw chip makers really being sold off yesterday on the back of commentary from, former President Donald Trump. I'm wondering if there has been a recovery and maybe even, Nick, markets understanding that when it comes to chip makers, those actually might be the butt of a lot of the political narrative emerging from the US.
Yeah, you're right. But kind of, pick your poison, because the sort of Taiwan Semiconductor, they took a big knock when potentially Mr. Trump threatened, the sanctions on chips, etc., coming out of that part of the world. So that stock was down close to 10% the morning after. It has subsequently bounced back after a decent set of numbers the other day. But interesting enough, if you look closer to home, so domestically, if you look at Intel, which is based in the US, and the idea that more and more sort of protectionist duties are coming in, that was actually up. So, a tale of two very different stories. And of course, the poster child, NVIDIA, that actually bounced back quite nicely yesterday. There was a report coming out of Reuters that they are producing what they're going to be sort of more China-friendly chips, whatever that means. Anyway, market liked it. That stock was up about 5%. So again, plenty going on, lots of different sort of stories and different narratives.
I see here at home also, Nick, we're seeing lots of polls emerging. We're starting to price in a September rate cut. If we don't get that rate cut in September, markets will take a knock. I'm just keen to get your thoughts here on where we are with this issue of interest rates and inflation here at home and around the world.
So yeah, not only I'll take a knock too, because I'm looking forward to my interest rate cut. But I was actually quite surprised. I thought there might just be a very, very small chance that we were going to get a cut from Mr. Kunze and his team last week, but they did disappoint. They didn't cut. But interesting enough, last time they met, it was unanimous, no rate cut forecast amongst the MPC members. This time there were two dissenters, so it's definitely leaning that way. And I don't think they would be too out of kilter having a cut. We had the ECB cut, we've had the Bank of England indicating they're cutting. We've had even the Bank of Botswana, a few sub-Saharan African central banks cutting. So it wouldn't be out of kilter to do it, but as we know, our team is notoriously hawkish, so that is definitely coming. And of course, inflation numbers, as you mentioned, this Friday, out the big inflation print out the States. We're looking for definitely a softening, and I wouldn't be surprised. Markets are already pricing in a rate cut coming in the US, and I think we've certainly seen the peak globally for the interest rate cycle, for now anyway.
Let's get into some company news now, maybe looking here at home, starting off with Kumba. I think that iron ore price really put them under pressure. But I think what's also interesting here is that from a production perspective, we are seeing Kumba do super well. And so it also speaks of stockpiles. And that's not great for the company right now.
No, it's not great. I think they're doing with the best they can. I mean, we all know the story. There's no use harboring on about it with Transnet and logistics, etc. So we do know that it has been a problem. But overall, I thought it was quite a decent set of numbers. And, they weren't as bad as we were certainly forecasting. And you see the stock price is up a little bit today off the back of it. I mean, if you look at just pure valuation point of view, it's looking extremely cheap. They came out with the dividend. That puts them on a full year dividend close to somewhere between 8 and 9% in my calculations. So still quite attractive, but they are unfortunately, there is definitely a slowdown. Their biggest market, China, we all know the story out of that too, so they are going to battle against that.
Big surprise for me today was Cashbuild reporting a 4% rise in revenue. We know it has been dud after dud. I think every reporting period for Cashbuild post the COVID DIY boom. But it looks like their fortunes could be turning around. I'm actually, I don't have the conviction to make a call, on whether matters have turned around for them or not.
Exactly, Shane, those long-suffering shareholders, they looked like they were getting it right, and then of course the last couple of quarters it just hasn't quite come home. But a little bit of lighting in the tunnel, maybe, and again, if we get a little bit of an interest rate cut coming in the next the couple of meetings, the good news out of certainly the microeconomy, the South African market, certainly more domestically looking, they might sort of benefit. And as you pointed out in your intro, they are increasing stores, so they are getting a little bit of increasing their sort of footprint as well. So I think it's looking better. If you are a shareholder, it looks like there are better things coming.
And then Rainet, they've also reported a 1.6% rise in their net asset value there. We know there are very specific investments there. I think British American Tobacco and the Pension Insurance Corporation Group, a very interesting investment for them. Those are the main investments within there. And Nick, what do you make of this performance?
Yeah, I think it's been a bit of a frustrating investment for shareholders. It's still trading at a significant discount. I think you peg it close to almost 40%. A lot of holding companies in South Africa have a similar problem, but Rainet doesn't seem to be going away. I guess to a certain extent, there's nothing really exciting. That big dividend they keep getting from British American Tobacco. The pension corp, though, I agree with you. I think it's quite an interesting investment, and there was rumours someone else was sniffing around them as well. I think this is certainly that gap will close. And I think they're probably going to be under a little bit of pressure. There's, certainly with domestic operations, they're, allocating capital now. There's a real push with the private equity business within South Africa as well. I think they're on the right side of it, but it'll just be nice to see that gap closing a little bit. That discount is pretty wide still.
I'd like to go into the stock pick segment now, Nick, but first let's reflect on counters that have found favour with industry peers.
For those that are willing to buy some South African small cap stocks, there are quite a lot of compelling opportunities at the moment. And one of those are Argent, which I have highlighted before, but I still think Argent is incredibly undervalued at the moment. So the net cash compared to the market cap of the business is, call it roughly mid-50s to 40% this market cap. So that's yes, they're going to earmark some of those for deals overseas, but yet it's made that there's no balance sheet risk.
Yeah.
The SA component of the business has been outperforming for quite a number of years. Hopefully, if economic activity picks up a little bit, they could perhaps do a bit better and perhaps make it easier to sell, because they are trying to sell the SA assets and invest more offshore.
I'm going to stay in the SA Inc. retail space, and I'm going to go for Mr. Price. I think that the trading statement was generally quite positive. I think if you just kind of look into the detail, you'll see that June sort of growth was up about 12.7%. Yes, if you average it out over the time period, not great. But I think the backdrop of a better economic environment, less load shedding, the potential of interest rates starting to turn and come down before the end of the year, I think all plays into the hand of Mr. Price. And I think if we do get some foreign interest in South Africa as we start to move towards the end of the year and into early next year, I think it's not on a demanding valuation. Looking forward, it's probably above its medium.
My stock pick today is Louis Vuitton, or LVMH. So with AI and the rapid changes we're seeing in technology, we often talk about how the world will change over the next 5 to 10 years. But I think we also need to invert that question and ask ourselves, what will not change? What's unlikely to be disrupted by AI? And I think luxury is not going anywhere. Louis Vuitton's been around since the 1850s, so that's 170 years old. The shares are down about 20% over the last 12 months. The consumer discretionary sector as a whole has been under pressure. I don't think they're bottoming yet, but maybe they're close to it.
All right, Nick, keen to get your thoughts on some of those. We've got Mr. Price, LVMH, as well as Argent.
Let's start with Mr. Price. I thought, agree with the comments. It was a really good set of numbers, despite a lot of competition coming in from the Chinese, Shine and Temu. They've done reasonably well. I think that like sales were better. I think their cash sales were up about 5% as opposed to credit. So that is a good sign of their sort of controls that are very, very well run. And I think Mr. Price, I think, is a bit of tailwind, exactly like the commentator said, with a bit of a tailwind now with interest rate cuts coming. I think Mr. Price looks pretty good. And then Argent, I don't want to comment on it. It's a little bit small for us. But if I can comment on LVMH, I do disagree a little bit. He is right that luxury goods are not going anywhere, but I think the stock price is probably not going to go anywhere either. We are heading into a bit of a slowdown. No doubt about it. If you are going to buy luxury goods, there are a couple that you have to buy, LVMH being probably the best of breed with our Richemont number 2. So no disputing quality. But I think be very careful. It's a cyclical share. We are heading into a period of a possible slowdown globally. Its biggest consumer is China, and we have seen China slowing down a little bit too. So I do disagree slightly with that one. Although if you must buy a luxury goods retailer, it's going to either be LVMH or Richemont.
And with that said, which counter are you loving this afternoon?
So I'm sticking a little bit boring, going local with the banks. I think where there's more and more foreign flows coming back in, we've seen a real push into our local domestic bonds in the mid sort of duration and the long duration. Some nice flows coming in, which is going to benefit those spreads with our local banks. I think if I had to pick one specifically, I think Standard Bank stands out for me, sitting around about 211 Rand, not demanding, dividend yield of over 8%, P of under 10. I think is a good 20, 30 Rand still left in that counter for now.
Well, Nick, an absolute pleasure having you this afternoon. Thank you so much for your time and insights. That was your Midday Markets Update with Sanlam's Private Wealth, Nick Kunze.